Is it a better idea to sell your house right now and cash in on your equity or wait out the housing pullback? The housing market in Southern California is seeing a slight correction, and it has sellers wondering, should they sell right now or hang in there? So for the younger population, it typically makes sense to stay put. The cost of selling generally greatly outweighs the cost of trying to pull that money out and time the market. But if you're older and you're relying on your equity as income for retirement, that's a different story. So here's how we're answering that question for some of our older clients that are getting into retirement and relying on their house's equity. If you believe that real estate prices are going to go down from here and you have equity in your house, you have the ability to tap into your house's equity through what's called a reverse mortgage. It's the same thing as a traditional mortgage, except the roles are reversed. Instead of making a payment to the bank pays you. Now, what do they get in return? Well, upon passing, the bank has interest to your house, and your heirs either have to sell the house to pay off the bank or secure a mortgage loan to pay off the bank's debt. So let's say you have $1 million property that's completely paid off. What some of our clients are doing are accessing that equity through a reverse mortgage, taking out 80% of the loan to value, so up to $800,000, and then investing that money into a fixed income product such as an annuity or a US Treasury that are yielding 5 to 10%, which is a lot of money. One of the benefits of a reverse mortgage is that if housing prices continue to go down, well, you don't have to pay any additional money to the bank. The bank is only entitled to the debt that they lend to you, plus the interest that adds on monthly as time goes on. So just like you, the borrower accumulates interest debt on the loan that the bank gives you, they accumulate interest on the loan that you essentially give to them. One other thing that I hear contemplated a lot is whether or not somebody wants to take out equity on their home and use that money now for retirement or leave that money for their heirs when they pass on. Now, this is going to be unique to every individual. It needs to be looked at on a case-by-case basis. But what it means to your heirs is that if you take a reverse mortgage and you cash out, in that example, let's say $800,000, every month there's interest being added on to the loan. And if that interest doesn't match the rate of appreciation that's happening in the market, well, then the property can become underwater in the future. And so it's something to consider. If you want to transfer this home to them and just expect that they're going to be able to pay off the loan in the future to buy the house, they may not be able to, or it may be difficult for them to keep the property. So we review all of these points on a case-by-case basis, but a reverse mortgage may make sense for you to create some certainty around your finances while we head into this recession. If you have any questions, please reach me directly. And as always, please like and follow for more. I'll see you in the next video.